All right, so this is going to be a review of our economics class. We're going to go at a pretty quick pace with this. There's a lot of information to cover, so I would watch this video if you're trying to prepare for our final. Um, we will not go into depth in any one topic. I will just be hitting high points. Uh, you should have got the in-depth throughout the year. If you don't know anything that we discuss in this video, then I would suggest going back and watching corresponding videos or trying to find out about that topic. But I promise you, this is going to be a little long, but well worth your time. All right, so with that said, let's get ready to speed race right through this. All right, so I want to go ahead and start with the economy. What is economy? What is economics? Um, there are many different definitions, and we talked about a lot of them. As long as you know your key things in it, that is dealing with production, distribution, goods and services, and resources. Okay, so it's the use of resources to produce and distribute goods and services throughout various geographic regions or so forth. So make sure you know your key terminology inside of those. Economic concepts. Here are some things such as a good, something that satisfies a need or a want, a service, an act provided for someone that's tangible versus non-tangible. Bartering system, exchange of goods and services for other goods and services. Production, the creation of goods and services, which if you create these, you are a producer. Resource, something that is used for production. And allocation is the division of these resources. Consumption is the use of these goods or services. A consumer is someone who uses them. Distribution is the moving of these goods and services from one place to another. And scarcity is whenever demand is much higher than supply. Economic goals. Economic goals. Make sure you know the 5 economic goals, what they all stand for: efficiency, growth, security, equality, freedom, and which ones apply to which economic systems. Factors of production: land, labor, capital, and how you need each of those in order to work, and how they fit into the various flow models for the different economic systems for the free market, command, and mixed economies. The 4 major economic questions: what to produce, how to produce it, how much to produce, and who gets what is produced. Free market system. Make sure you know things about the free market system and how it works, also known as capitalism. Um, the decisions, those 4 major questions, are answered by the producers and consumers uh, in this system. Um, and private individuals own the factors of production: land, labor, capital. Um, Freedom is the main economic goal. Uh, a continuation, the question of who gets what to decide it is answered, as I mentioned, by the producers, and they rely on the consumers for that. Consumers make a lot of influence on the producers by what they buy or don't buy. And this forms the circular flow model. Make sure you look into that. Um, Driving forces of this would be the market force, which properties that lead to unintended outcome, profit motive, desire to make money from production. Profit is whenever your total revenue is higher than your total costs. Loss is whenever your total revenue is lower than your total costs. Incentive, cost or benefit that motivates a decision or action. Um, a command economy. This is command economy. Um, is a system in which the government answers the 4 fundamental economic questions, also known as a planned economy. Government owns most of the resources for production. Economic goals are equality, security, freedom from need. It's different than the freedom used in the free market system. It's also usually tied in with socialism. Um, some of the government's jobs is they assign production, they set prices for consumers, they decide people work, they set wages, and so forth. Um, and they offer another position that the free market system doesn't offer, which are the planners. Those are the ones who issue the commands for the government. That's a view of the flow model for the command economy. Like I said, make sure you know this for all three of those types of economies. Um, Cost benefit. Weighing your pros and cons is another way of saying this. People always tell you, oh, well, write down your pros, write down your cons. You're doing a cost benefit analysis, decision making process in which you try to maximize your benefits and minimize your cost. A benefit is something good received or something bad avoided. Uh, for example, let's say I'm a little child and I know if I don't draw on this wall, I won't get a spanking. Well, the benefit is I'm not getting a spanking. I'm avoiding something bad. Okay. So a benefit is not necessarily something good received, it's also something bad avoided. Um, Cost is something good given up or something bad received. Okay. You could give up money for something or you could receive a punishment for doing this. Um, Money is not, I mean, cost is not just monetary. Sometimes you have to give things up, and it can be subjective depending on your situation and taste. What might be a cost to me might not be a cost to you, and it can be unpredictable sometimes. Sometimes there's costs that we don't factor in. Oh, let me go on this trip. I plan on driving across country. I'm going on this trip. I factor in gas, food, hotel stays, everything. I didn't factor in my card breakdown halfway through. So it can be unpredictable. All right, why can you do what? All right, so technologies are advancements in machinery and equipment developed from scientific knowledge. It's not necessarily electronic devices, though we tend to assume that. Um, and you can look at what I've got it laid out there. A method is a change in the way of doing things, um, and it can help increase productivity, speed, and efficiency. One way to do this is standardization, to have everyone do something the same way. An example of this is if you look at shipping cartons, like the big shipping containers, they always you see in these docks and stuff in the movies. Um, they are all made the same way. Every country uses the same type. They all fit on the same ships. They stack real nice and neat. So much more can be shipped whenever shipping these containers. You fill them up with stuff, and they fill in and go. Um, Hey, consumers, everyone has needs and wants. A need is something you need to survive. A want is something you desire but don't need. Consumers do all the buying in the economic system, and they make several important decisions of what products to buy and what services to use, how much of it to buy, and how much they are willing to pay. And this all influences the game of economics. The producers, they make things for the consumers to purchase, and they pay very close attention to decisions that the consumers are making. Um, Consumers influence producers by buying specific things. Okay, if I go and I buy a lot of this, then I'm telling the consumer or the producer, hey, this is a good that the consumers want. Let me keep making it. Let me maybe improve it, or maybe these are improvements we made. More consumers are buying this, so let's continue to improve in this direction or so forth. They also use market research to figure some of this out. Um, Terminology, and there are a lot of things that can influence the way consumers look and buy things. Some more terminology: rational choice, financial planning, cost benefit analysis, uh, a budget, uh, your expenses, your fixed, your flexible, and your discretionary spending, income, Make sure you look at these. You can pause this page and make sure you kind of get some of that down. Um, More decision-making utility, its amount of personal satisfaction gained from the use or consumption of goods and services. Opportunity costs, the benefits and utility given up by choosing to do one thing and not alternatives. If I choose to uh, watch a movie, what am I giving up? Maybe I'm giving up getting to go bowling. Maybe I'm giving up uh, getting to go dancing or something. So I'm giving up these other things in order to go watch this movie. Maybe I'm giving up some sleep. Um, so that is the opportunity cost that going to that movie cost me. Marginal analysis weighing additional costs and benefits of going for one more of a unit. Risk aversion, the amount of reluctance a person has to taking chances. So if a person is willing to take chances, they don't have a very high risk aversion. They want to take chances. But if someone is very unsure of taking chances, they have a much higher risk aversion level. Cost benefits of business. They use rational choice, but only look at the monetary cost, whereas in personal cost benefits, we look at the monetary and non-monetary. Um, and because a business's bottom line is to increase revenue or increase profit, which is either increasing revenue or decreasing cost. Opportunity costs. Use inputs and outputs to determine the opportunity costs. And this is more kind of your business model of opportunity costs. Competition. Competition is what causes businesses to force themselves to improve. People tend to get better with competition. Look at some of your great athletes. They want to be better than the other people, so they continually improve. Um, and so do businesses. They do this. They strive for better technologies. They strive to do or make this product better than anybody else. And that leads to several market structures, such as pure competition, a monopoly, a monopolistic, and an oligopoly. Make sure you know those four. Um, they are important, and make sure you don't confuse a monopoly, which only one producer has a good with no close substitutes and controls the pricing. That's the one the government has like antitrust laws and so forth for. Monopolistic is the most common market form. It is similar to a pure competition, except products are similar, not identical, which allows some price setting. Monopolistic is what we mainly have, not a monopoly. Entrepreneurs, they're someone who starts, manages, and takes all the risk of business. So this is one of those people with a low risk aversion because they're taking on a lot of risks. Business types, you have sole proprietorships. It's a business owned by an individual and managed by a single individual. You have partnership, business owned by two or more people. Corporation, businesses owned by stockholders. That is a legal entity with rights to buy, sell, and make contracts. Private corporations, shares are not publicly traded on any exchange. Public corporations, shares are traded on a public stock exchange. Nonprofit corporation, organization to benefit its members or a special cause not to make a profit. So profit is not their bottom goal. The law of supply and demand. Okay, supply, you need to know how it works. Demand, you need to know how it works. You need to know how supply and demand will influence price. And don't forget to factor in how time fits into this. There's your demand and your supply. If you look, here's your demand, here's your supply, okay, and here's your price. All right, so that is your chart there. Um, Not only is price influenced, but it also influences supply and demand as well. So make sure you know how all these influence one another. Um, know your supply schedule, your demand schedule, how they interact, how they tend to come to an equilibrium price. Know how scarcity is, know the difference between scarcity, relative scarcity, know what a surplus is and a shortage is. Um, Production affects both of these and how it interacts, how the factors of labor interact with the supply and demand. Make sure you know your opportunity cost. Fungibility and elasticity. Make sure you know fungibility. That's when all the units of a good are the same as each other, like gas or money. Um, and elasticity, which is the flexibility of a consumer's demand for a good or service. If it's inelastic, if the price goes up and the demand does not change. But if it's elastic, the demand rises and falls with price. If it costs more, well, we're going to buy less. If it costs less, we're going to buy more. Make sure you know the difference between individual and public goods, or private and public goods. Private good is one a person can enjoy that good or services. Public is its non-excludable and non-rival. It's not regulated by supply and demand. Now, just because it's a public good or just because it's provided by the government does not make it a public good. So do not use that as your reason of why something is a public good is provided by the government. The government provides many things that are a public good. I mean, that are a private good as well as things that are public good. And there are those private institutions that provide public goods as well. So make sure you do not use who's providing it as your reason of which is which. Globalization, talk about the interconnectedness of people and nations throughout the communication, trade, and exchange of ideas. See how this influences, how this helps and hurts some countries. Uh, Talk about free trade between these different countries. Talk about trade barriers, policies that reduce or eliminate international trade, like tariffs, quota systems, subsidies. Um, Talk about problems that are caused because of this, such as outsourcing, offshoring, um, exploitation versus opportunity, cost and profits versus moral and ethics. Upside to trade, exchange of goods and services for other commodities such as money. It allows resources that wouldn't be somewhere to be there. It allows things that would be wasted to be traded, which increases efficiency. Um, but there's also downside, can lead to a loss of jobs in a region or area if people buy cheaper goods from another region. This leads to the protectionist policies that we were just talking about. The business cycle, make sure you know all the different phases of the business cycles and how they fit and how to graph those, such as a boom, a recession, a depression, a recovery. Make sure you know all of this and what causes these and what leads to these and helps prevent these. Make sure you know about the Fed. That's the ex-chair, Ben Bernanke. There. There's a new chair, and I cannot remember her name, but it is a lady who's in charge of it now. The government's tried to control or lessen the severity of the business cycle by using monetary policy. Make sure you know these different monetary policies. Functions of money. Make sure you know what money is, the medium of exchange, the standard of value, storehouse of value. More terminology, your balance sheets, your assets, liabilities, net worth, fractional reserve, reserve, required ratio reserve, excess reserve, and full reserve banking. The Federal Reserve Bank, also known as the Fed. Make sure you know the different things about it, what it does, and how it does those, and about its expansionary and contractionary policies. The stock market, it's gambling for investors. No, you don't have to know in-depth knowledge of the stock market, but know how the stock market works. Um, know about, you invest in the stocks, that the stock market can change from minute to minute. And the more you risk, the more you can win, but the more you can lose. Know about bonds. Know how bonds work. Um, how a bondholder makes money. Um, know about the face value, the maturity dates, the coupons, indentured, a bond certificate. And the three major types of U.S. of bonds: the U.S. Treasury bond, a municipal bond, and a corporate bond. Know about taxes, your income tax, your sales tax, your federal, your state, your local, um, and that taxes make up a large percentage of the revenue in America. Um, Individuals base it on how much money you make in 1 year. That's the individual tax. Businesses are based on their yearly profits. Um, Individual income taxes bring in about 5 times more. Why? Well, a lot of the loopholes and so forth. Payroll taxes, the tax based on employees' wage or salary, paid half by the employer and other half held from the employee. They have specific uses: Social Security, Medicare, unemployment. If you ever, whenever you start working and you see these things that taken out of your check, that is a payroll tax because it comes out as your payroll comes out. Property tax, capital gains tax, property tax on your property, and tax on profits from selling your assets. Consumption taxes, these are, sales tax, tax on all things bought. An excise tax is a tax on specific product or transaction. You have a luxury tax, a sin tax under the excise tax. Luxury items are like private planes and things like that. Sin tax are on goods and services that are considered physically or morally damaging, like smoking or drinking. Tax distribution, progressive tax versus a regressive tax. A lot of you get confused with this. A lot of you get progressive tax that the more you make, the higher your interest or the higher level of tax you're going to pay. You're going to be in a different bracket, so the more you make, the more you're going to pay. The thing that you get confused on is regressive tax. It does not mean the less you make, the more you pay. Everybody pays the same no matter how much you make. Now, that makes your percentage larger because everybody is paying the same. If you have more money, well, you paying this amount is going to be the same. So that is a regressive. Everybody pays the same amount no matter how much you make. Um, a tariff. Again, make sure you know different tariffs, what they're used for: revenue, protective, retaliatory. Um, Public goods. We've already talked about this. Know about the free rider problem. Um, know your absolute advantage. It's the ability of one producer to produce a more efficient or cheaper product than another producer. Uh, and this is a major way to help decide on what to produce. Your absolute versus your comparative. Remember, your comparative advantage is when one producer can produce a good at a lower opportunity cost than another. Sometimes it's better to choose the comparative advantage over your absolute advantage. I might have an absolute advantage on two or three things. Well, but I have the comparative advantage on this, so I'm going to go with this one. Um, Containerization. This is what we talked about earlier with the standardization. It's the use of containers to unite to make one cargo size for transportation, supply, and storage. Again, talking about outsourcing. No, the International Monetary Fund is an international organization with 146 members created to lend member nations funds, facilitate international trade, create international monetary corporations, and know that the World Bank, created in 1944. Make sure you know about that. And the WTO was created in 1955. It's an international organization that deals with global rules of trade. All right, so that's it. If you have any questions, you know where to get a hold of me. So until next time, deuces.